What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. Today I'm joined with David, and is it Bader or Botter, or how do you pronounce it?
You got it, Bader.
Bader. Okay, sweet. And I got some great news for you today, David. We are joined by my very favorite member of the audience. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate players. That means buyers, sellers, sponsors, investors, operators, construction ground up people. And you may ask, why would you do that? And the answer is, if you've ever heard of off-market deals, private deals that you're not supposed to publicly discuss, then you know you need a documented prior substantive relationship, or else the SEC will get ants in its pants and ruin the whole party. So that's what we're up to. And the benefit for you is I will help you learn how to effectively communicate on the subject of commercial real estate deals and the teams that take them down. And you will understand how my guest fits into those deals as well. But before we get too excited about the deals themselves, David, do you want to say a thing or two about yourself?
I'm in Lincoln, Nebraska here, and I guess my main thing is acquiring larger scale apartments. We've done, what are we? We're almost to March, and we've done three different transactions of basically 10 million, give or take each. And that's kind of my gig. And I also run my own portfolio. I don't do a lot of syndications. I like the JV deals, but I love dealing with people who do syndications because I'm just not into that paperwork type of thing. I'm not as smart as you. And I think that's a great idea, man. Thanks for
Awesome.
having me on. This is a really cool idea.
Well, definitely my pleasure. And but before we get too excited, I gotta say, but wait, check your eight. Now, David, I don't know how you are with technology, but maybe you can see through the camera and down there. But the user may have this hideous subscribe button, and maybe they, should, okay, it's a stupid joke, but I do it in every episode because it's not so subtle. But let's talk about the five distinct motivations. I've by this point spoken to at least 1,000 different commercial real estate players, and everybody has their own unique why, but I found that they fit pretty neatly into these five different motivations. And the reason why you need to know them is because these deals take months to close. They take years to go full cycle, especially if you're doing some sort of ground up construction or something like that. And the thing that we need to know about each other is what's going to keep you from throwing in the towel and giving up when the going gets tough. And these five different categories are: the first one, preservation of purchasing power. What on earth is that? Well, some people, they're job optional. They don't have to work. They pay their bills from the proceeds of ownership from their portfolio. And if you're in that kind of situation where you don't have to work, you may ask, well, why would you go through the hassle of a new acquisition and the different risks involved? Well, there are a couple of really clear scenarios. One of them is if inflation rears its ugly head, that's going to eat away from your purchasing power, your cash flow, and it's going to be time to make a new acquisition. The other circumstance is if you can buy at a steep discount, like if it's a distressed property or if there's an asset crash, it's time to get very, very active. Now, me and my real estate journey, I'm not quite there yet. What describes me a whole lot better is I'm looking to trade time directly for wealth. And what I mean by that, it's all intertwined with the fact that I've got a technology background. Whenever you're a high salary earner, high wage earner, you're paying more in tax than anybody else. And me, with my tech background, I started doing it for a firm in Ohio where the guy was flipping 10 houses a month before I ever met him. And when I saw him earning the way he did, it just screamed out to me, I need to figure out how to pivot where I'm getting compensated in the form of deployed capital, aka equity, rather than in salary and then giving half of it to the government. So that's what I'm up to. That's a little too subtle for some people, especially youngsters. Frequently, they're more interested in either hustling like crazy right now and fast tracking their retirement, or they want to take control of their schedule. And what that looks like is, maybe working fewer months per year, fewer weeks per month, something like that. They really want to have more options on how they spend their time. And to be brutally honest, a lot of people who want to fast track retirement, they think that that is everybody's motivation, and they're just in various levels of hiding that fact. But I assure you, that's simply not the case. Some people are fueled by ambition, that generational wealth. They want to buy their entire hometown. They want to make sure that their great grandchildren never have to hold a day job. And even though that's vilified in some circles, the fact is that means they're going to be hustling into their 90s, which makes them very valuable members of your GP team. So it's a very valid reason for making these acquisitions. But it's contrasts a little bit from this last group, which they're not so much about the generational wealth, for their own family, but they've picked a sector of society, or maybe it's animals or the environment. Regardless of what it is, they figured out that there's a financial component to making a really big impact, and that's why they're doing their commercial acquisitions. So, David, are those 5 different motivations? What combination of them would you say describes you best?
I mean, that's all of them. I suppose the last one is help people who need it. And there's a lot of different ways and a lot of different people to help people who need it. But I mean, I have a large construction background. I used to try to help these construction workers and create jobs for them because I was a general contractor. So we'd sub out to a lot of and it's an easier barrier of entry. It doesn't take a college degree to get into, to become a drywaller or a painter. So I used to create those jobs and try to help those people out. And that's difficult. That gets difficult sometimes because you don't always get the reciprocation over years. So the reason I kind of got into these larger commercial acquisitions is we're helping out like just more ambitious, more higher level people, smarter people. And when you tend to help out those people, the reciprocation just keeps coming back. And it just, I mean, nothing against any construction workers. It just depends on the type of people. But I've found, if you're helping out more of these higher level people, like they have a tendency to give back more, and you just create a better synergy going, helping those type of people.
I absolutely love that answer because, when I started doing better for myself, that's what I wanted to do as well. And I found, and that's actually a lot of the inspiration for these 5 different slides. It's because I realized that once you start getting somewhere, the number of people who you can actually help, it's surprisingly limited. And so I was inclined to help people who are willing to help themselves a fair bit. And that's very similar to what you're describing there. So
Yeah, and
excellent.
you help we do these commercial acquisitions and syndications, like that creates a lot of jobs on these value add apartments. I mean, you're creating a ton of jobs for everybody, construction workers, title companies, lawyers, I mean, everybody. So it
Mhm.
just helps spark the economy.
I love that answer. I love that answer. Now, of course, when we go through the motivations, it's easy to sound overly optimistic. And of course, every business has risks involved. Real estate is a very mature industry, so it's definitely not exempt from that. And if you've ever been involved in one of these off market deals, these 506B syndications, then whoever the securities attorney was in the mix, and there really should have been one. If there wasn't one, you need to run away, not just walk. You need to have some sort of exemption in order to be syndicating and offering passive interest. But when I was going through the questionnaire for those investments, I found the tolerance for risk question, it lacked utility. It didn't really give an actionable answer. And so to do my own suitability questionnaire, similar to those financial questionnaires on this show, I made my own tolerance for risk question, which is a fill in the blanks. It is. There are many popular investment asset classes, but I think blank is too risky. So, David, it can be inside real estate, it can be outside real estate. What's too risky for you?
I mean, I love deer. That's the only question you kind of prepped me with, and I did that cocaine and hookers answer that somebody else gave was top notch.
Right,
But
exactly.
I mean, to me, you can make money doing almost anything. And the where I see most people get into trouble is just when they pay too much for any asset. Like if the purchase is too much, then it's too risky. But if you purchase it right, then almost zero, no investment is too risky because when you can sell it for more the next day, it's not a risk. So as long as you get that purchase price right, the risk is fine. If you get that purchase price wrong, it's too risky.
I love that answer. So let's go to the next question, which is favorite deal metrics. I know that this is going to be perfectly fine for you, David, but I got to confess that when I first started doing these chance encounters, I was reluctant to do this one, even though it's vitally important. And the reason why I was reluctant is some people in this industry, they're more like public relations, the front facing, the marketing, something like that. And so they're not going to be the spreadsheet junkies who love to be up to their eyeballs in numbers. But regardless of where you are in these different deals, there's going to be some metrics where you use it as the first indicator that it's worth pursuing or doing the numbers a little bit deeper. And for anybody in the audience who's only listening and not watching, I always read out this list. And of course, it's not exhaustive. There are a few others that people like to depend on, but here they are. Cash on cash, IRR, cost per door, net operating income or NOI, the going in cap rate, which really means the difference between the local standard cap rate for that season, that month or whatever, versus what you're actually paying for it. Then there's the loan interest, which also can mean that you're assuming a loan. The occupancy, which is the inverse of the vacancy, so it's the same thing. The average income where the property is located, the amortization period of the loan, especially if you're assuming it, the difference between the market versus the in-place rents, the population growth where the property is located, the sponsor record, which means how many deals have gone full cycle, how many are on the go right now, the waterfall split or exit strategy. In other words, what's going to happen to your capital after it's been returned or your percent of the ownership. And the last one I have listed is DSCR, which is debt service coverage ratio, which means how much of the revenue is going out the door immediately just to the loans and whatnot. So David, you're free to mention any others, but what are the top three or what are the ones you really focus on?
I mean, that is a lot of answers, but the thing that I look at right away is like, I want to make sure all those are accurate. Because when you're looking at these apartment deals, like you'll get the NOI and you'll get the occupancy and you'll get all this cash on cash return. Well, is it accurate? A lot of times these numbers can just be skewed. So it's very, I put a lot in cost per door because like cost per door and then look at the location and how much, where can I get the growth to? And I want to be at a cost per door under the market value so I can get out of it right away. The other thing that I mean, the DSCR, if you're okay on the DSCR and the place isn't on fire, people aren't exiting the area really bad, like you should be in good shape. So DSCR is like important. And it's hard to find right now.
Absolutely, absolutely. I love that answer. I'm eating it up like a delicious subscribe sandwich, the very, very subtle reminder right there. And it tells me it's time to bring out the Dan Does Deals Commercial Core Competency Cube with the 6 key roles in any commercial real estate deal. And the reason why this is such a vitally important piece of these chance encounters is because when somebody comes on and you know these 6 different sides, you'll be able to understand how they fit into the deal. And it'll also help you effectively communicate on the subject of commercial real estate, which I think your career in this sector really depends on it. If you can't express yourself very clearly, then you're not going to get very far. And if you're looking at this cube here and going, wow, I really wish I could get my hands on one of these, the good news is it's completely free. You go to dandoesdeals.com and there's a great big button. You can click on it and download it. And like a complete dummy, I committed the cardinal sin of marketing, which is to give away your freebie without asking for contact information. But it's really important to me that you can learn how to express yourself on what everybody is up to in these deals. And as a matter of fact, it gives you some insight on why some of the unlucky or not so well planned out properties went in foreclosure last year. It's because they were missing a piece of the puzzle and trying to snow the financiers. But let's go through all 6 sides. Let's start with repositioners. That's the most front-facing person in the deal quite frequently. They are acquisitions people. They're looking at a bunch of different properties. They're doing a bunch of paperwork. As as David mentioned, you need to underwrite the deal. You need to do the math. You need to figure out, is the seller slash broker even telling the truth about how much the property is making? Because, okay, like they have all kinds of fun and games. They might do, like 16 months and pretend it was 12. There's all sorts of ways that they can rig the numbers. But the repositioner is doing all of that because their job is to find upside. In other words, find a way for that property to make more money than it is right now. And one of the more peculiar ways that a repositioner pulls that off is they all have a vast network of financiers, which are people who only deal with paper and money and with the owners of the property. So they're not dealing with residents, they're not dealing with construction people or anything like that, and they are not part of the GP team. So that's what they're focusing on. But the reason why the repositioner has to have a vast network of financiers is because if you can secure a more advantageous loan, you've got your profitability just baked into the deal already. So that's why they're always talking to financiers. But the next place the repositioner is always going to look is the operations, to stop those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets and collecting rent and mowing lawns and shoveling snow if you're where I am. The parts that I contribute to operations when I'm on a GP team, there's a couple of them. One is web-based applications and automations for anything that's needed like that. And me personally, because I'm a remote-based person, I also am aware that the vacancy issue is the biggest one that you have to deal with. It really is the enemy. And so even if you are dealing with larger properties and outsourcing the property management, if they can't fill those units, somebody on the GP team better have some serious marketing shops to get those units filled. And that's another way that I pitch in. But of course, there's only so much wiggle room you can do by optimizing operations. So the next place the repositioner is going to look is to get a contractor team involved to do a value add. You upgrade the property, you make it a nicer place, and the next residents theoretically should be happy to pay more in rent than the previous ones. But you can spend endless amounts of money on contractors. You could go ahead and gold plate the toilets, but I don't think you're going to get a return on investment. And the thing that you're going to have, especially if you're like me, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground to keep an eye on the contractors and the operations, make sure that they're keeping to schedule, they're not dragging their heels, they're not using subpar materials and whatnot. And somebody has to be able to be there in an hour or two at a moment's notice. And categorically, that's not going to be me, because I'd still be stuck at an airport in an hour or two. So that's just not going to cut it. But let's do a hypothetical. Let's say you are becoming a repositioner. Maybe you're an engineer or you're a physician or an attorney, something like that. And you get the idea, well, hey, I know how to buy a house. I just have my down payment and then I borrow the rest. I bet if I want to take over that 350 unit apartment complex down the road, I can just get my circle of friends to each put in 100K each or something like that. I'll turn around to the financier, say something along the lines of this: hey, I got this great 350 unit apartment complex. It's tens of millions of dollars. You got tens of millions of dollars you want to say lend us? Well, the financier is going to have one burning question that I haven't answered yet. And if you're in a mentorship program for real estate or a guru, something like that, you're going to want to listen very carefully to this next part, because it's going to be a real rude awakening, especially if you're non-accredited and doing a 506B. The financiers are going to say, who's the sponsor? Who's the KP? Now, what's that all about? In order to be eligible for a commercial loan, somebody in the fold has to already own a similar asset. So if you really want a loan to take over that 350 unit apartment complex, you need to find somebody who already owns a 350 unit apartment complex and get them in the deal, because that's going to show the banks that you're not just going to run the property into the ground and lose everybody's money, including the people who had the loan sent to you. On top of that, though, among the GP team, you need a certain amount of liquidity, and you also need a balance sheet, in other words, collateral for at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So David, it sounds like you have some sponsor KP roles. Everybody has some sort of financier roles, the financier relations and the repositioning, but I don't want to put words in your mouth. What boxes are you most likely to check on your next deals?
Well, to me, the repositioner is the most important. I mean, that's basically what I do for a living for like the past 10 years. You get somebody who's really good at the reposition, and like I said earlier, it helps you get the asset below market value, and that will help out the rest of the whole entire transaction. So
Hmm.
that will help out every single thing. You can screw up operations a little bit if you have a really good repositioner because you got it so cheap. So, I mean, that's my main role, I guess, is a repositioner. I like that word. I love the whole cube, man. That's a cool thing. I gotta give me one of those.
Awesome. Yeah, dandoesdeals.com. Great big button that does it. So you could go ahead and print that out. But let's get on to the buy box then. And when real estate people are saying, hey, what you looking for? What's your buy box? What's an ideal property? They mean what's easier to say yes to and more difficult to say no to. And really, we're asking about three main things. First one's geography. Where is it? Which state, which county, which neighborhood? It could absolutely be vital before they're going to call it ideal. So that's the geography. Second one's size. And most of my guests on this show are in multifamily, which is apartment complex investment and flipping or running them. And the way that you define the size in an apartment complex is based on the number of apartment units. So the reason why you need to know this sort of thing, there are a few reasons. One is because the type of group that takes over 10 and 15 unit apartment complexes, they're going to be fundamentally different from the ones who take over 150, 350 unit apartment complex numbers. So the size is definitely going to matter. There are other types of commercial real estate that go off of, acreage and square footage and whatever. But because of that reason, that's absolutely going to matter. Now, the third one is usually called class. I don't like the term class. I prefer the term desirability because I realize that we're really talking about two fundamentally different things. The first one is the condition, and then the second one is the area. And if you're talking about condition, we're talking about how old is the building where the property is located, what sort of luxuries and amenities are there, like is the place really beat up or is it in good shape, and yeah, what sort of nice stuff really makes it appealing for residents to live there. That's the condition. But if you're talking about the area, especially in multifamily, because it's residential, the school districts where the property is located, it's going to be very important. And then, regardless of the type of real estate, the crime rate's going to be relevant. And then, of course, there's that old broker saying, that trope of saying location, location, location. I don't really like that one because I think what they really mean is traffic, traffic, traffic. A property is more desirable if you've got a gazillion people passing by every single day. And so that's going to matter. But both the area and the condition are ranked the same way as in grade school, where you got A plus at the top, and then it's A, and then A minus and B plus, and so on. So as far as your buy box, David, what you looking for?
I mean, all that stuff you said is important. The area, the size, the all that, but like one, make sure there's more people coming than leaving. So the immigration needs to be going up and wherever you're at. And what I like to look at is the reconstruction cost. So
Mm-hmm.
for example, if it takes, in my area, it's 200,000 a unit to build new.
Mm-hmm.
So if we can get into something, we're getting into this new project that like 80,000 a unit, we'll spend 15,000 a unit to remodel it. So we're in at 95,000 a unit. Well, that's 50%. That's even below 50% of new construction costs. So anytime you can, you have something that society needs that they cannot recreate it anywhere close to what you have it for. And you can leverage it. So I look at things a lot of times that way. I don't know a lot of people doing that, but that's kind of one of the factors when I go into buying a bigger project. Like I want to be well under the reconstruction costs. You can be all in remodeled unit, 50% of the new construction costs. You're going to be all right.
Mm-hmm. Mm-hmm. And then as far as states that you're interested in particular?
I'm all over the Midwest, but I mean I like red states just because of the laws in the blue states are getting very difficult. I mean, I know people making real money in Illinois, and it's great because they're just you have to know the system you're in and you have to know the laws you're in. But the red states make it a little bit easier to know the laws, and they tend to be a lot easier on landlords, and they tend to be where people are moving recently from information I've been reading.
Yeah, I'd absolutely agree with that, and I'm glad that you didn't use the normal term because I don't think it frames the argument very well. Usually they say landlord friendly, tenant friendly, and I don't think that that is a good reflection of the truth. The fact is, what they call landlord friendly, it's not like they want people to live in horrible hovels and everybody's a slumlord. What it really means is, does the government agree that when you buy something, it belongs to you, or do they think it's like, yeah, you're kind of borrowing it for us from us with your money? It's like if the government wants to own the properties, then just go right ahead, but you're just not going to do it with my dollars. Is the way that I view that. So I'm glad you put it the way that you did. But let's talk a little bit about people then. My favorite thing about commercial real estate is because it's multifaceted. You got these different roles here. People tend to be really eager to make introductions, referrals, and whatnot to complete these different teams. But because we are so we all have our own unique skill sets. Even though we're eager to make those referrals and introductions, we're better suited to help some people more than others. Me personally, because of being a tech guy from the internet and doing all this marketing content and all that kind of stuff, just to make the tech part and equity work. The sponsors and KPs I tend to be most eager to speak to because they've got those kinds of foundations where either through a debt fund or something like that, or through actual sweat equity, I can help them out. And they've got a foundation big enough where a person like me can make a really big difference. Whereas when you're first getting started, you're better off getting somebody who can just call people for 80 to 120 hours every single week. And that's not where I'm at my most effective. But of course, everybody also, we're in the business of deploying capital into these deals. So financiers are great to talk to as well. So, David, as far as people who are in the audience, who are you best suited to help?
Uh, well, I'll put it this way. There's basically two types of entrepreneurs. There's a multiplier, which is what you are. I don't know if you know this, but like you're out there meeting new people and you have the ability to like take something small and run a large company. And then there's a multiply, so that's a multiplier, and then you have a simplifier. Now, I am so far on the simplifying side. I run a fairly big organization, but it's basically just me and an assistant. I'm not good at running teams. I'm not good at managing people. I'm awful at like going from, 0 to 1,000 units. Like that's not exactly my thing. I'd rather go like 0 to 100 really skillfully and make that 100 make more cash flow than 1,000. So I tend to simplify everything down. So to answer your question, I love meeting more multipliers because I'm so bad at like running the teams and meeting the new people and doing all those things like you guys are doing, like the multipliers. I love running into those guys and partnering with them, and it tends to work out. I like going into companies and kind of just simplifying everything down and doing a couple little things to just help everybody out.
I love that answer. So the question on everybody's mind must be how to reach out. And of course, I'm going to sandbag the conversation by talking about myself first. So I'm lucky to have this distinct last name. So I'm really easy to find, especially on LinkedIn, which is the social media platform where I spend most of my time. And of course, I've got books available on Amazon on a few different subjects related to business and bettering yourself in one way or another. But if you have your phone handy, you can scan this QR code, and that goes to the FAQs page of 506BME, and that's the platform where I offer the service of maintaining and creating your compliance documentation in case you have a 506B deal. And the idea being that what are you going to do if your laptop falls into the bathtub and the SEC wants to see all your documentation? You better have a backup. And the added benefit of my platform is that I'm eliminating plausible deniability regarding the public solicitation as much as humanly possible. But David, if people want to reach out to you, phone, email, website, social media, what are the best ways to reach out?
Yeah, I mean, I got my phone number. I don't know if you can post it below. I have a business line that I put out everywhere, but LinkedIn and Facebook is the easiest way to find me. I'm hardly ever on Facebook and Instagram, but you can definitely find me on there, message me that way. And I need to get on the LinkedIn more. That's a good idea.
Yep,
I like the
yep.
platform. I'm just never on it.
Yep, yeah, absolutely. It's definitely the place to connect with other business people and find clients and all that kind of fun stuff. But that brings me to the last part, which is actually not for you, David. It's my public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs, like migraine-like symptoms, I'm confident it's because of the downright hideous subscribe button that's down there, and you can get rid of it for free by just clicking on it. And full disclosure, the reason why I want people to click on the subscribe button so badly is because if enough people do, then YouTube will actually start to pay for these videos instead of me. And I think that would be absolutely amazing. Just full disclosure, the trade-off for you is my videos may show up on your list of suggestions, but quite frankly, you can go ahead and ignore those suggestions because I just really appreciate the fact that you spent this time with me. Just like David, I appreciate you joining me. This has been fantastic.
Appreciate the opportunity. I love what you got going on here, Dan.
Awesome, man. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.